Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. This segment is brought to you by Xceligent. They track commercial real estate really all over the country. Visit Xceligent.com. And we're talking commercial real estate, we're talking finance, we're talking life insurance companies, we're talking financing for your next project. My guests are Tom Fink, he's on the phone with us from Trepp, and Greg Michaud from Voya. He's here in Studio One. And gentlemen, we're talking about life insurance companies doing loans for commercial real estate. They want the cream of the crop, I guess, of the projects. So how much volume is actually happening through life insurance companies, Tom?
Well, I think last year they did 60 to 65 billion. Yeah. Everyone that I've talked to in the insurance business is looking to do more this year. So you could see the life insurance companies topping 70 billion of loans made this year, and that'll be a combination of new projects and refinancings of loans that are already on their books.
And Greg, what kind of projects do life insurance companies like?
They like what I call the four food groups. I mean, they're really looking at retail, maybe not retail as much because of all the noise around retail. So they're hesitant on retail, but they like retail, office buildings, industrial, and multifamily. And there's challenges to do each one of those products. Our life company, we prefer industrial, and we're overweight industrial in our portfolio.
Well, go ahead.
I was going to say, and then you'll see some hotels, mini storage, mobile home parks, things like that in the other category.
Well, it's interesting to hear you say, they refer to retail as noise, because it seems like it's really doing well. I mean, certain projects obviously are having trouble.
Sure. No, it's when any time the Wall Street Journal publishes an article about Amazon eating up the world or anything like that, you'll have to do about 5 memos for your boss because about your retail portfolio. Right. And when we look at our retail portfolio, the average LTV is 45% loan to value. It's a lot of grocery anchored. It's a lot of high quality business. And we're not seeing any stress in that area. Where you see the stress is in the secondary malls, some big box retail, but you don't see that product in life companies. The malls were typically done in CMBS because those were large loans. And you have a segment out there. I can't remember I don't know if it was BlackRock or Blackstone, but they probably 5 years ago, their strategy was the secondary mall strategy, which I don't know how that's working out for them, but that's where you're seeing the stress in the retail market, and that's where you see the negative publicity in the market.
Yeah.
So I call it noise.
Right. I think it's a good thing to say. I mean, it's obviously project-specific, location-specific. And so what do you guys expect moving forward? So life insurance companies are still going to be bullish. They're going to do more loans. We're going to have more competition from loans. What's that going to do to rates and terms? What do you expect moving forward?
Sure. So, whenever you see treasuries move up, which we have in the last couple of days, that always does put pressure on spreads. And you saw spreads coming in regardless, and you're seeing spreads come in a little bit more. Now, our overall yield is probably staying static because the movement is kind of keeping things at level. But you're seeing the average spread on a life company deal, which is about a 10-year deal, which you price off the 10-year treasury, is going to be in that 130 to 150 range, which is pretty tight for historical numbers.
Yeah. And Tom, is that pretty competitive with the other sources?
I think for the product that insurance companies like, they are very competitive. I think that one of the things that you have to look at when you are looking at different sectors of the lending environment is that they all serve different needs. Life insurance company, is really good, I think, for the established real estate player who has a long-term commitment to his projects and is investing in, like Greg said, the four main food groups, but also generally they're not as diverse geographically. And Greg, challenge me if I'm wrong on that, but they look to be in the top markets for each of those segments.
Yeah, no, I will challenge you on that. That's typically in the larger life companies. The guys that are doing 10, 12 billion a year, they've got to be in New York City, Boston, San Francisco. Our portfolio is not, we're more in the secondary markets. We like secondary markets at this point in the cycle. And so we're in the Salt Lake Cities, the Raleighs, the Charlestons, Charlotte, those areas. And so you'll see the smaller life insurance companies, medium life companies, what I mean by the, below the top 5 largest ones, you'll see them much more in the secondary markets.
And what size loans are you looking at mainly?
We're pretty skewed. We'll go from 5 million to, we did 500 million this year, but our average deal size is about 25 million.
And Tom, you just heard us talk about the noise, quote unquote, around retail. What are you seeing in CMBS? What are you seeing with other lenders?
We're seeing more pressure in the retail space. As Greg said, CMBS has more malls, and those secondary malls are clearly under a lot of stress, and not just from e-commerce. I mean, it's also a competitive situation. I don't think there's any market, primary, second, in the top 50, metropolitan areas in the country. I think they're probably all overserved when it comes to malls. So part of what's happening is just the normal, competitive winnowing of one mall versus another. I think another thing that you have to look at is a lot of this real estate that's having trouble now was built in the 70s and 80s, so it's old. It's not easily reconfigured. The demographics of the area it's located in has changed. So we're seeing a lot of stress in the retail space of the retail we see. We're also starting to see, in some markets, problems with some of the grocery-anchored stuff. And I think there you have it's a competitive situation. You have, Aldi's and Lidl's from Germany both trying to expand their footprint in the, low end of the grocery chain. And I think, people are looking at the Amazon Whole Foods purchase. And, my own personal opinion, not having access to Amazon strategy, is they're probably more, my thinking is they're trying to take costs out of the last mile of delivery to their customers. And I would not be surprised if in the next year, a year from now, you can pick up your Amazon packages at Whole Foods.
Yeah, I believe you're right. And while you guys are here, before you have to go, what would be the takeaway, the biggest takeaway you took from the survey?
I'll let Tom.
Go ahead, Greg.
No, go ahead, Tom.
What I took away is that the insurance companies continue to do a very good job of picking the assets they want to pick and lending on strong assets and building value in their portfolios. That's what I see happening. It's going to be interesting to see what happens if we get into a recession anytime soon.
Yeah, no, I'll add it's interesting to see where different life companies are lending. One thing I notice is you're seeing people go long. We've got a segment of product where we're going 20, 25 years on our loans. Wealthy family offices like that business, but you're starting to see the life companies are sticking to their knitting, and I think you're going to continue to see that going forward.
Yeah. All right. Well, gentlemen, thanks for joining us here in Studio One, and Tom on the phone, and Greg in Studio One. Thanks for being with us, guys.
Thank you.
My pleasure, Michael.
Yeah, and we sure appreciate it. And, if you would like to know a little bit more, there's some press releases about the report. You can't actually get the report, right? But there's some press releases about the report. We'll put a link on our website at commercialrealestate.com, commercialrealestateshow.com, and be sure and check it there. And if you have some comments, maybe you're a lender, maybe you're looking for a loan, reach out to us. Leave your comments below on the show website or wherever you are. And wherever you are, thanks for joining us. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.